program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Tuesday. I'm Andrew Gagan. Good to have you with us again here at Ausbiz. Let's get across what happened overnight. Mixed session on global equity markets. Gold and Bitcoin surging to new record highs on political uncertainty. Wall Street saw the Nasdaq and S&P 500 reach new records as AI-related deal-making boosted investor sentiment there, despite the extended US government shutdown. Chip stocks were the focus after AMD said it would supply AI chips to OpenAI in a deal that could generate tens of billions of dollars in yearly revenue, it says, and would allow the ChatGPT creator to buy a stake of up to 10% in the chip maker. AMD shares initially jumping as much as 38% before easing. Other AI-related stocks rose as investors reassessed the race to power the next-generation AI infrastructure. Meanwhile, Tesla advanced after the EV maker teased an event scheduled for later today when it's expected to unveil its much-awaited cheaper car, a stripped-down version of its best-selling Model Y. Verizon shares dipped after the telco company named former PayPal boss Dan Schulman as its new chief executive. Broker TD Cowen cut its Starbucks price target, citing a weakening labour market affecting Gen Z, sending the coffee chain shares lower. And regional bank Commercia jumped after Fifth Third said it would buy the company in an all-stock deal valued at $10.9 billion. Well, political turmoil has become a focus for markets. In the US, the federal government shutdown has entered into its sixth day as lawmakers fail to break a deadlock there. The shutdown has postponed the release of key economic indicators, forcing investors to rely on secondary non-government data to gauge the timing and extent of the Fed's interest rate cuts. Meanwhile, in France, new Prime Minister Sébastien Lecornu has resigned barely 14 hours after appointing his cabinet. And staunch conservative Sanae Takaichi is on course to become Japan's first female Prime Minister. She's an advocate of Shinzo Abe's Abenomics strategy to boost the economy with aggressive spending and easy monetary policy. Now, on the bond market, sell-offs of sovereigns caused by political turbulence in Japan and France has added to buyer hesitancy in the United States. The US two-year Treasury yield rising 3.6%, the 10-year is up to 4.16%. The US dollar index up close to 0.5% on the day, while the euro has slipped the yen at a two-month low against the greenback, and the Aussie is at 66.2 US cents. Oil prices have gained, with OPEC Plus production increase planned for November seen as more modest than expected, tempering some concerns about supply additions. Brent crude futures up 1.5% to $65 a barrel. Copper's fallen, iron ore unchanged at $103 a tonne, and gold has surged to another record high above $3,900 an ounce, buoyed by growing expectations of the Fed rate cuts this month, as well as economic and political uncertainty. Spot gold up 2% in that session at around $3,960 an ounce. And Bitcoin also hitting a new record high. It was just a short time ago above $125,000, has since come back, but that's been fueled largely by institutional investors. Well, let's get across what is moving. Plenty, it would seem. Steve Sosnick joining us from Interactive Brokers. Steve, welcome back. Good to see you. We're seeing this everything rally at the moment, aren't you? Market melt up. What do you make of what you're seeing? Let's start with what you saw on Wall Street, particularly with those AI plays.
Well, good morning, Andrew. Great to see you. There's basically a set of stocks now that can do no wrong. It doesn't really matter, what they say as long as they're in motion. I think, the news today was good from the point of view of AMD because they had been a bit of an also-ran compared to certainly NVIDIA and to a certain extent Broadcom. And now all of a sudden they're back in play. It's a little interesting that OpenAI is I guess hedging their bets because they just did a $100 billion deal nominally with NVIDIA not too long ago. But this is the game we're in right now. To a certain extent, the more you spend, the better it goes, and people aren't really bothering with asking the whys and the wherefores and the return on investment questions. As long as you're doing something and moving forward, that's sufficient to get your stocks moving.
Well, in fact, I see you've reminded us that it was just a few weeks ago that OpenAI CEO cautioned we are in AI bubble. And to that point, you're saying that investors rewarding companies simply for spending money on AI.
That's really what it is. I mean, the first wave of companies that were rewarded for spending money on AI were companies that had plenty of money to spend. So it's Microsoft, it's Nvidia. I'm sorry, they're spending it in Nvidia. It's Microsoft, it's Meta, it's Alphabet, Amazon. These companies have immense revenues, huge cash flows. So if they're going to spend money wildly on this new technology to ensure that they're the forerunner in the forefront of it, it's understandable why the market might reward that. And in the case of a gold rush, you don't want to be seen as being on the sidelines. So the market was giving them a pass. Now we're getting to situations where OpenAI, though, is the one spending a lot of money. This $300 billion deal that they have with Oracle, the $100 billion deal with NVIDIA that essentially NVIDIA is paying for, this deal with $100 billion at AMD, where it almost seems like AMD is, paying for it with warrants because of the halo involving the association with OpenAI. At some point, a company that has $12 billion in annualized revenues is going to have to come up with $500 billion over the next few years, $300 billion at a minimum. That's a tall order. And so at this point, you do have to wonder, are we doing the same thing we did when we built out bandwidth in the early days of the internet, which was built out the bandwidth that was necessary to run the internet, but at the expense of the builders, which included companies like Global Crossing, Northern Telecom, and of course, at their most extreme cases, the fraudulent companies to keep up, which were Enron and WorldCom. So, history doesn't repeat, but it often rhymes, and I'm starting to get some of those echoes again in this rush to build out without really regard to where the ultimate money is going to come from to pay for all this.
Well, to that point, Steve, you mentioned it, the early days of the internet. I was just reading something said there by hedge fund billionaire Paul Tudor Jones, who's saying, look, this has echoes of what we saw in late 1999 with the dot-com bubble. Are you seeing parallels there? Are there warning signs?
Well, I mean, I think, number one was the elements that I brought, just mentioned in terms of the bandwidth craze. And I think now, just where all news is good news, where just it doesn't matter. I mean, I think about the days, those days where you'd have some company that was like a shipbuilder and they'd say that they were getting in the internet business, which you're seeing a fair amount of here, where, we're getting into AI, and that's enough to give you a big boost. You're at that. To me, any time that investors stop being concerned quite so much with the basic business of return on investment at the corporate level, as opposed to return on their own investments in the market, that's when you start to get into a little bit of a tricky situation. And, is it a bubble? I don't know. But if Sam Altman's saying so, and if he's now since then basically committing to deals that essentially have him just spending oodles of money, you do have to wonder if that's the route we're going in. But it's always tricky to call a bubble, and it's even harder to call a bubble, to call the day the bubble pops, because there is no warning for such a thing.
Well, and perhaps those investors then looking for that insurance, hence we have seen those records in both gold and Bitcoin.
Yeah, well, that's, again, this is at this point, actually, the gold and the Bitcoin is almost, a move out of fiat money, for lack of a better word, or certainly out of the US dollar, because these are, I've referred to this various times as gold being the anti-dollar, and to a certain extent, Bitcoin can function that way too. If it were to take on the digital gold role, that would be how it would function. It's been more of a speculative asset, but now so is gold. Because that's been on a momentum-fueled run as well. So to a certain extent, you can almost say that stocks are an anti-dollar too, right? Because if the fiat currencies are weaker, you want to own shares of money earning companies, and so this all becomes kind of cyclical. But I think if you have sort of this flight out of one set of major financial assets into another, again, that's that's telling us that there are some excesses and underlying concerns in the financial system that we're not necessarily reckoning with.
Do you want to be chasing these rallies at this point, Steve?
Depends on your point of view. If you are an institutional investor who has to answer to a series of investors who say that, how come you're not performing? How come you're not meeting your benchmarks? You have to hold your nose and chase. And that's where my, don't fight the tape, but hedge against it instead comes in. If you're an individual investor, I think be judicious. I think it's tough to sit on the sidelines right now. It's human nature. You don't want to miss something like this. Everybody wants to be a part of it. But I think I actually think, it behooves you to think, if not cautiously, at least rationally. Do the homework and think about where the income is coming from and where the cash flows especially are coming from, because again, we're talking about the potential for immense cash drains from certain types of companies. And companies can play games with when they're timing their revenues. Companies can play games with their earnings in terms of what's a recurring item, what's a non-recurring item. It's hard to lie about cash flow, so follow the cash flow.
Steve, thanks so much for joining us on Interactive Brokers. Have a great week.
My pleasure as always, Andrew. See ya.
Let's return to the local market then. We are expecting a positive start. Let's get across what we're seeing, modestly higher there, 10 points. We will get across that. Of course, obviously a focus there, particularly on gold stocks, given new records there, and more broadly what we're seeing in the market. Stay with us.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in Trusted Advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.